Hi guys, I hope all of you are doing well. This is your Nifty Guy. Unlike our portfolios, I hope all your trading days were safe today. Mr. Donald Trump, with his relentless interference in world politics and trade wars, has been causing some havoc into the global stock markets. Nonetheless, these are some factors which we cannot control. What we can control is our own set of trades. Today's video might be a little bit longer than my usual length of the videos, but I would highly recommend anyone who is watching this to please watch it to the very end because uh, today I will discuss it in in-depth analysis of Nifty and not just for Monday, but maybe for an entire week or so, or how can we position ourselves based on what are the most probable scenarios which can happen. And so yeah, so that we are not on the wrong side of the trade. So please stay tuned. Now see, in markets, news will come and news will go, but all you need to do is follow the price. Yeah, keep a track of the news and the events going around and how it might impact the stock markets. But yes, please also follow the price for taking the trades, right? So we'll just start with the analysis first, and then we'll discuss the global macroeconomics factors later on. So yesterday, what we had discussed was we'll long Nifty above this particular swing high with a pullback. We'll short Nifty below this swing low again with a pullback. Now, Nifty opened with a gap down and immediately went into a sell mode. Now, you tell me how would anyone would be able to capitalize on this? Right now, you're seeing this particular price action which is already formed. But once the market opened here, what is the guarantee that markets are only going to go south from here? It could have reversed very well. And that is something for which, see, it was already below our shorting zone, but we needed a pullback, which came in around here, which was a good pullback. So the first entry of our trade as per our plan and as per our setup was below this swing low around this 950 candle. As soon as this low was taken out, we could have initiated a short. Now, there could be question in your mind that Nifty has already moved and we have missed such a big move, and we are only captured this particular move, and this move was in a big momentum, and wherein this move has some green candles in between. So why did we not trade this? Now, if you trade this, you are most welcome to do trading as per your style that suits you. But this is something which I have back tested, and this is my and listen, my setup. I do not trade breakouts and breakdowns without a pullback, so that saves me from a lot of fake outs, and yeah, I get to save my capital. So yeah, for me, this was the first trade of the day when this particular pullback came and the low was taken out. I shorted the markets over here. I got out somewhere around here. It was a good trade nonetheless. I do not have the FOMO of having this miss this particular rally or miss this particular fall and then only capturing a part of it. See, in case if you have that fear of missing out of all the major or the all the moves in the market, none of the traders, not even the best traders, would be able to capitalize on all the moves. You would miss some part of the move, and it is just like a insurance policy that you pay the premium towards and you get the benefit out of it. And post that, the second trade that I took was around these levels. So I noticed a triangle formation, basically prices which were, I actually delete these trend lines before I start recording these videos so that I can draw it in for you guys and show you. So this was the trend line and the basically uh, triangle pattern in which the prices were consolidating. And once this candle, the 1:10 p.m. candle, closed below this trend line, I got ready to take a trade on the short side. All I needed was a pullback, which immediately came in. And as soon as this low was taken out, I again entered shorts, which again gave me a good, good move. Further to after this particular trade, I did not take any more short trades because, as some of you would already know, I follow RSI very diligently. And there was a major divergence, as you can see on the RSI. Price was making new lows, but RSI was making new highs. And this was not just on the 5 minutes time frame, but on a 15 minutes time frame. If you see divergence was there, check out this 75 minutes time frame. The divergence was still there. On a 4 hour, you will not see the divergence because there's not enough data. On 30 minutes, let's see. Yeah. So on all major time frames, there were divergences because of which I refrained from taking any short trades, any further short trades. And the point to be taken a note of is we are already at a support of this particular zone that we had drawn a couple of days back. In case if you would miss, you can go back to the older videos and you will see the day on which we had drawn this particular level. And this has been there on our charts. And if you see the markets after falling down, it came here, took the support from exactly the top of this particular range, gave a bounce, and then again it's still in here. Now this entire range is a support area, which is basically the zero point 0.5 to 0.618 zone of the Fibonacci of the entire up move which was there. And if market has to reverse, it has to reverse from here, or maybe just take some liquidity from below the zone and then reverse. In case if this is just a retracement and not a reversal, in case if it's a reversal, it will go further down. Let's just start the analysis for next week on a weekly time frame. I'll just remove the drawings for a while. Now, the thing to note over here is, so market from here was since the all-time high which was made around here, market on a weekly time frame has been in a uh, lower high and lower low formation. So this is the market structure, which is the bearish market structure the market has been following. Now, the last swing high, which was there around here, which was around the high was 23,807, got breached last week with 23,869.6, just by a few points, around 50 points, 50 odd points. But yeah, it got breached. So market has formed a higher high. Now, in case if the market has to change its structure from a lower high, lower low to a higher high, higher low structure, which is the sign of a bullish pattern, mark this particular low, which is there around 21,980 or maybe 20,000, 22,000 round figure. This has to be protected at all costs. And if this breaks again, this is the bull trap and market will continue its downward journey. We have still not seen and the market structure has to reverse on higher time frames first so that we can trade with much more confidence in the right direction. Till then, we'll follow the price whichever way it goes. Now, on the daily time frame, if we look, so market's price right now is at a very, very important confluence point. So this is not just the fib support at or the 0.5 to 618 support that we just drew, but if you look at this particular trend line, I'm drawing this trend line in black. So yeah, this was a trend line which is connecting these three important peaks which are there, and market has given a breakout of this particular trend line, and it is also a retest of this particular trend line right now. So it is not just the fib retracement point, but also retest of this particular trend line, plus the divergences which are there on all major time frames. So what we have done so far is we have seen Nifty on a 5 minutes, 15 minutes, 30 minutes, 25 minutes, hourly time frame, weekly time frame, daily time frame. So yeah, we are sitting on a support, and what the prices will do from here would be of a major, we need to pay close attention to it so that we don't get trapped on the wrong side. Now, if we are to plan a trade specifically for Monday, we'll keep these drawings intact. We'll just delete these. See, the short trade is a no-brainer. In case if the market wants to go down further, we do not want to fight the market. The short trade is a no-brainer, complete no-brainer. We will plan a short trade below this. Now, there's one more scenario which can happen over here is, and please, please, please pay close attention to it. Markets gave a good one direction move today. Uh, Now there will be two set of people. One set of people who would have carried shorts overnight because either they're in deep uh, green profits because they would have shorted the markets around here, around here, around here, and they would be in profits by the closing. Markets have closed near the lows with just a small retracement at the end, and these people would want to, looking at the global announcement and the global scenario right now, which is kind of negative because of Mr. Trump, they would have carried shorts overnight. And in case if market opens below this particular zone, makes a red candle, and then the high of that red candle gets taken out, uh, it will lead to a good one side momentum on the top, and that is something that you should pay close attention to for Monday. That is a good scenario that can play out, and this swing is also very important for us right now, and we can look at a long entry if market For some example, if market goes well over the weekend, as some positive news comes in, market opens with a gap up. Again, it would trap a lot of people who would have carried overnight shorts, and that can give us a good price momentum on the upside. Now, my only mantra in the market is do not predict anything, but be prepared for anything. So in even in the most positive and the bullish markets, in case if the price shows me some weakness, I do not hesitate to take a short. Similarly, in case of very negative markets, very negative scenarios, and if the market wants to go high and the price is showing me that it wants to go up, I will not hesitate to take a bullish trade as well. And that is how it should be. Yeah, we can have our biases. Definitely, we'll have the biases when looking at the price. I knew today that yeah, I'll be more interested if even if this triangle would have broken on the upside, I would have traded, but with a lower quantity. But because it broke down on the lower side, I traded with a good enough quantity. Now, this because this price, this particular price zone is an important price zone of confluence. I am expecting price. Price is not going to touch it and bounce up and go back. So I'm not asking you to buy around here, but to observe the price action around here. Again, the prices can go in a sideways range here. It will trap you on both sides, on the bearish side, on the bullish side, whatever trades you take. So please trade with lower quantities and with strict SLs right now because price will, if even if it has to reverse from here, it is not going to be a one-way up rally. It will form a base here, trigger some, create some bull traps, some bear traps, and then continue the upward journey if it has to reverse or go down and break this particular zone and continue the down journey. So that is something that time will tell, and we will trade it when, as and when the time will come and the price will show us the way ahead. So I hope my way of analyzing Nifty is helping you guys the way I have done a top-down analysis from starting on the weekly time frame, going down to all the way to the lowest time frame that 1 minute time frame is something that I trade on. Sometimes, not all the times, 5 minutes is my favorite time frame for scalping. But apart from the 1 minute time frame, I think I've analyzed almost all the major time frames that I use. All are here saved in my favorites. So if you guys like my way of analyzing Nifty, please like the video, subscribe to the channel, put down anything that you might have to say to me, be it feedback, be it criticism in the comments box. I'm open to both. And over the weekend, in case if I get some time, I will try to make some videos on the setups that I use so that you get a much better understanding and you guys are prepared and you guys train your eyes to spot them in the live market. So, or else I'll see you on Monday, post the market analysis. Be safe. Market's gonna be volatile. Mr. Trump is not gonna take a rest so soon. Uh, with China's retaliation being imposing another reciprocal duty on imports from the US, things are just starting up. Things are just starting to heat up. And as traders, what we can simply do is observe the price action and follow the price and try to not get trapped. That's it. I think trying to not get trapped and trying to save your capital is more important than making money in today's market. If you have the capital, you'll come back again the next day. But if you just blow it up on random trades, you won't be left with enough capital to trade the next day. So I think that's it from me for today. See you guys soon. Cheers. Have a good weekend. Thank you so much, guys.